Good morning, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays, coming to you live from Bali, Indonesia. I'll still be here for about the rest of the week. So let's take a look at the charts. This will probably be one of the shorter shows. And we'll go straight to screen share. All right, speaking of Bali, we will be back here for the Financial Summit, November 1st to 7th. So check that out. More updates to the website are coming. If you want to support, please check out the affiliate page of tonevays.com. Let's look at the charts. Let's go to the weekly chart. I want to refresh this just in case. Just want to make sure I get the final price. The daily candle will have just flipped over. It's actually good doing these shows at this hour. It's morning for me here in Indonesia, and we just got a brand new daily candle. So though this is the weekly chart, not the daily chart. Make sure everything's working. I know it sucks for Europe because you guys are asleep, but in the US it's good. Here in Asia it's good. All right, I'm going to take a quick peek at the oscillators. You can see the RSI starting to come back down. It never crossed the prior swing high. That is bearish. You have the MACD that did not cross over. And if the price starts to go down from here, the MACD will not flip over, which would be very bearish. You're not in Bali is not great. So I'll definitely, that's not good. I checked the bandwidth before I started. It was okay. Let's go back to screen share. I see the comment says Tone is a living bear. We are still 60% down from the all-time high. Show me a market that is down 60% that is bullish. Any market in the history of the world. You're supposed to be a bear. It's still a bear market. To me, this is still a bear market. We had a nice bounce. This may or may not be the low, but this is not a bull market yet. Welcome to trading. If you've never traded traditional markets, then you don't know. Like, you don't know what you don't know. Okay. When a market is down 60%, I'll always be a bear. It's irrelevant if it's Bitcoin or something in 50 years from now that we haven't thought of yet. We cross this red line, I'll be a bull. That's when I feel we're actually going to break the prior swing high. Audio isn't matching the video. Well, that's not good. Bad internet. I'm not sure what I can do about the audio not matching video.
Then I can switch it back.
I can do here. Okay. I'm a bull in a bull market. I'm not a bull in a bear market. To me, this is still a bear market from 2017. We are still significantly below the all-time high of 2017. So it remains a bull market. Is the low in? Probably. Is the secondary low in? Maybe. Until I know for a fact that the secondary low is in, and the only way to know for a fact that the secondary low is in is to break the prior swing high. The prior swing high was at around 12,000 if we use weekly candle close. Okay, so get me back to 12,000 and I will be a bull. 12,000 would be 4x from the prior swing low. That's okay. That part is irrelevant to me. I want to be a bull in a bull market. Trying to pick the ultimate low is great. If you can do it, you can do it. But trying to pick the ultimate low and trying to pick the ultimate high is what destroys most traders and why 95% of the traders lose money. So us as trading educators are always in this dilemma, right? So I get accused of, I guess making people broke because 99% of the traders lose. Well, 99% of the traders lose because they try to pick the very top and they try to pick the very bottom, and they over leverage and they lose all their money. But a real trader, is more cautious and he doesn't take unnecessary risks. And not taking unnecessary risks keeps you still a bear. That's the unnecessary risk. Okay. More people have probably went broke over leveraging to the upside and getting crushed to the downside in Bitcoin. Like it is an upward trending market, but if you don't have control of your leverage, you will lose all your money. So the weekly chart is neutral at best to me, and we'll see what happens in the future. The real trouble is the daily chart. The daily chart looks like the bear market is actually about to get started. You just got rejected by a declining 200-day moving average. The last time that occurred was here. This is a rejection at the declining 200-day moving average. Do you want to do the math on what happened next? Once it got rejected by a declining 200-day moving average, Bitcoin lost 62%, 63%, 62.5%. Okay, that's what happened the last time Bitcoin got rejected by a declining 200-day moving average. Is it different this time? Maybe. It might be different. Willy Woo certainly thinks it's different this time. I don't. I'm not saying it's going to happen again, but I can't be certain that it's different this time. Here's what a 62% drop from a declining 200-day moving average looks like. It takes us back to 3,300, which would be a really bad area, by the way. I don't want to see Bitcoin in this area. I think Bitcoin will stay above, 4,000. Probably stay above 5,000. Okay, but that's history. We can look at the prior time Bitcoin got rejected by a declining 200-day moving average. That would be over here. We're going a little ways back. Bitcoin got rejected by a declining 200-day moving average right here. It was right at the peak, and it kind of flirted with it several times and even stayed above it. But I would say this is the best case scenario for a rejection. The 200-day moving average was technically still rising, but it was starting to flip over. But it doesn't really matter because the high here is very similar to the high there. So I'll even take the lower high. So here's where Bitcoin got rejected by the 200-day moving average. And from there, Bitcoin fell 76%. So the prior time Bitcoin got rejected by the 200-day moving average is even worse than the last time we got rejected by the 200-day moving average? Is there a prior time we got rejected by a declining 200-day moving average? And I don't believe so. I don't think this particular chart goes back far enough to 2017 for us to see that. And yeah, it doesn't. So that's it. Those are the three examples. Two examples, sorry. Is it enough data to really be sure about anything? No, but historically, any asset that gets rejected by the 200-day moving average ends up in very serious trouble. So this is very, very concerning. Very concerning. Okay. It's concerning me. Yeah, it doesn't have to concern you. You guys can still be bulls. We are in an 8, and the 9's coming tomorrow. I'm pretty sure the 9's going to come. This consolidation is looking like a descending-ish triangle on lower level time frames. I'm pretty certain of that. And the market doesn't care about my opinion of the market. Bitcoin price will do whatever the F it wants, whether I'm a bear or a bull. It's really irrelevant. I'm just here to read the chart. And if the chart's bearish, I'm going to be bearish. And if the chart is bullish, I'm going to be bullish. See, unlike a lot of people, my opinion is fully unbiased. I don't have a position in the market. I have a hodl position in the market, which means I should be a bull. But I'm the only YouTuber that's providing you an unbiased opinion because I don't have any trades on. Now, everyone seems to be upset that I don't have any trades on. You will be just as upset if I had trades on. But this is an unbiased opinion of what the charts are saying. You don't have to agree, and you don't have to watch. But this is what an unbiased opinion looks like, that the charts are bearish. The charts have been bearish for a long time. This run up to 14,000 was bullshit. I was calling it bullshit. I couldn't explain why it was bullshit. But in hindsight, it looks like the Ponzi scheme out of China had a lot to do with it. I didn't even know the Ponzi scheme existed. I just knew that the charts looked off. They just looked off. You can't miss out on an upcoming bull run. It's actually impossible because you would be a buyer when the bull market begins. So it's like saying, oh, you missed out on Bitcoin between 150 and $1,000. The real money was made between $1,000 and 20,000. That's the real bull market. For me, the bull market really started around 500 bucks right here. And I was a bull right there. So when Bitcoin rallied from 150 to 500, this rally made no sense to me either. But this ascending triangle made sense. And I was a huge bull in the market from May 2016, pretty much all the way to the all-time high. In fact, a week past the all-time high. It started to not make sense to me above 7,500, but you stay with the trade. The real money isn't made picking the low. That's how most people go broke, because they're usually wrong at picking the low. The real money is made in safe trades, because if you make a bad decision, you'll have no more money. So it's actually impossible to miss out on a bull market, because the bull market is going to take place from 20,000 to 100. So the daily chart looks like it could rebound tomorrow. There could be a 9 tomorrow. There probably will be. And that could rebound the market. Will that rebound take you to new all-time highs? It's too early to say. I would look for a 1 to 4 candle upswing, but I don't see us crossing the 200-day moving average. I see us getting rejected by it again if it even gets that high. And I still see lower prices. This is the 4-hour chart. We have now made a slightly lower low. We have fallen all the way to, what's this price? 8,200. I don't like this consolidation. Again, look at your moving averages. Bitcoin is now getting rejected by what I have as the short-term moving average. Actually, not sure what that short-term moving average is. It's a 20, the 20-period moving average. Look at these perfect rejections here and here. And right now, what I'm looking at on a short-term time frame is this low, and the break of this low I like to draw my best fit lines, a line that touches the most number of candles without breaking the bodies. So that's actually it. It looks like we might have touched that line earlier in this candle. So, and we still have 2 hours to go. Another break of this line, I believe, will accelerate the prices lower and quickly. So I am looking at this down to the next support area, which is the combination of the setup trend line and the moving average. So let's put this somewhere in between here, and we make this a red arrow. So that's what I'm looking at upon the break of that line. When do I think that's going to happen? Probably in 2 candles. So the next candle will probably be a red 1, and then a red 2 breaks that low. So 2 candles from now. So by end of, well, by the morning in New York, basically. That's when I'm anticipating this. The monthly chart. Haven't looked at the monthly chart in a long time. Here's the monthly chart. This is the traditional candles. You can see how I anticipated the swing high to take place here around 5,000 to 6,000. This was me doing it back in May of last year, almost been a year now, and I expected a drop of what's my percentage here? I expected the high to be in this area around 54. I actually went short at 5,400. I ended up making money on that trade, even though we didn't go down much. So if you look, I anticipated a 70% drop and about a double bottom-ish consolidation, right? So I anticipated a 70% drop. Well, maybe a little higher than that, actually. About a 70% drop. But I expected the high to be at 54. The high wasn't at 54. The high was at 14,000. So a 70% drop from 14,000. Where does it take us? Takes us to about that 4.5 area, that $4,000 area. Okay. So remember, I was also guessing where the swing top would be. The swing top went way further than I expected, but I expected this not to break the all-time high. I expected this to still be a secondary high, followed by a decent 70% correction. So I'm still looking for that 70% correction. It's just coming from a higher high. That will finally set me up to potentially be a bull or higher prices. I either need lower prices or higher prices to be a bull. I can't be a bull at these current prices. I have to remain a bear. The Heikin-Ashi candles are the ones that are working really well on the monthly chart. And you see this, first of all, it's a red 4 once again. And you see this neutral indecision candle. It's not good or bad. You are looking at yet another death cross in the moving averages here. Don't know the last time that happened, but the moving averages move pretty slowly. I'm using the 7, the 30, and the 50 on the monthly chart. I don't know if those are the best ones to use. You can see how we did break the stop and reverse points on a monthly scale on Heikin-Ashi. I don't know what that means. I don't know if that's useful or not. Yeah, this is not how I like to break the stop and reverse points for entering trades. I want to break it at the lows with consolidation, not at the highs. So the monthly chart isn't very useful. I want to look at the S&P. The S&P took a bit of a nosedive. I believe today is the weekend. GBTC premium. Let me refresh this chart. I'm still looking. Maybe it's good I didn't get in. The premium was low enough for me to get in. If you don't know what the GBTC premium is, Google GBTC on this YouTube channel. We explored it in depth a few years ago. Oh, I think I'm supposed to grab coffee with someone right now. Hold on. Let me text a friend. All right. So I still think we're going to have lower prices in the very near future. So I should be able to pick up GBTC at a lower price. Hopefully it'll be with a low premium as well. Not really going to look at the shit coins. Gold closed the week well, but next week is the 9th. So I think gold will top. S&P, everyone is blaming the Chinese virus for the drop in the S&P, maybe. It drops. So right now, I'd be a little bit nervous about the market. Remember, I really liked this consolidation at the high on daily, but from a weekly perspective, we still have some room. But I would not be long in the market right now. I would still respect this 913. I don't like buying 4s above 3s. I only like buying, 2s and 3s above the prior number. And a red 2 below red 1 tomorrow daily on Monday is not a good sign. All right, that's it, guys. I'm going to call it a day. I'm still very concerned about the price of Bitcoin. You can see way more red arrows. You can see the green arrows working out nicely. Every time Bitcoin crosses a point of resistance, it's meant to go higher. Here we are crossing a point of resistance. That's why the green arrow took us perfectly into the next resistance point. We break that area. The green arrow takes us perfectly into the next resistance point. We break that area. The green arrow takes us to the next resistance point. If we can break the 200-day moving average, the price should rally all the way to 97, 9800, which is the next resistance area. And if we break that area, the price should rally to new all-time highs. The question is, how likely is that to happen? And not very likely, because I still think we're in a bear market. And on the flip side, if we get rejected by one of these, we go down to the next support area. And while there is some support here and a golden cross could be coming, perhaps I'm actually going to lower this arrow because a 9 is coming tomorrow. And therefore, we can anticipate a little bit of a bounce to the upside, but I don't believe it's going to last very long. I don't like these arrows. They're like too big. I don't think this bounce is going to last. I'm not going to bother. You know the drill. I think there'll be a little bit of a bounce for the next couple of days, and then I think it's going to drop hard. But at the same time, look at the 4-hour chart. The 4-hour chart is telling you that there's going to be an imminent drop down. So that 9 could be a big wick candle and then a rebound. So most likely, we are looking at this. Oh, wait, wrong arrow. Most likely, this is what I'm looking at. I know what, I'm going to take one more arrow. Okay. Put this here and then do this. So this is what I'm looking at, guys. Something like this. You know, a wick down over the next few days, a rebound back to the current area as a back test. Very similar to what happened here. So I can literally just copy paste going backwards. I can take this line, I can put it right here. Here's our best fit line. I guess I can put it like here, right? Because that's a candle. So here's our best fit line. Here's that drop. Here's that rebound back to the area of the big drop. And then we dropped again. And now we're going to go below this line, back test it, and go down. That's what I'm looking at right now. The market can always prove me wrong. Oh, I have no idea what I just did. Okay. The market can always prove me wrong. All right, guys, I got to meet a friend for coffee. I'm going to call it a day and see some of you here in Bali. Before I go, don't forget the financial summits taking place in the Dominican Republic and here in Bali, and also Unconfiscatable is coming up in less than 1 month. Less than 1 month for Unconfiscatable. All right. Once this page loads, I'm gonna go ahead and call it a day. If you want to support, please check out the affiliate links. I gotta add one more actually to this. Really cool company. All right, guys, there it is. There's Unconfiscatable, and there's my doorbell. I will talk to you all on the next one.